Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Chahine.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Chahine, Dennis Dick. On the show today, we are going to talk about the after-hours trading in Shopify after the news that Adobe made an acquisition, so they're not Shopify no longer in play there. We have earnings from Kohl's, TJ Maxx, Advanced Auto Parts, AutoZone. We want to talk about the buyback that Micron did yesterday. So, of course, we'll take your questions from our chat as well. premarket.benzinga.com, youtube.com/Benzinga TV. Guest today, it's Tuesday, so Nick Chahine will join us. He will is the author of Create Income with Option Spreads. He'll stop by at 8:35. Joel, what's doing this morning in the S&Ps?
Trading in the green by 475, adding on from Monday's overnight gains. Your close at 33, we found support at 30.50, just below that. That's a target on the downside. On the upside, folks, we're trying to bust out here. You had a high last week at 41.25. Current high 39, even Monday's high 39.25. So there is some formidable resistance in the market. Bitcoin futures trading in the red by $160 at 82.35. Crude well into the 72 handle, trading up 20 cents at 72.55. Gold getting a bounce, trying to get back up to 1,300, trading up 360 at 12.94.5, and silver in the green by 11 cents at 16.63. Dennis, how are you doing on this Tuesday morning?
Still tired, still trying to recover from the weekend. I came back and there's like a million things to do because I was off for 3 days. So I'm like, emails full, house is a mess. My wife does the best she can, but you got to cut the lawn, outside stuff, and so many things. You take 3 days off and it takes you a week to recover when you have 2 kids.
All right. Well, you're on the rebound here. You look a little better than you did yesterday.
A little bit, but still feeling rough.
Shouldn't the house be cleaner? Because you weren't there.
It's the 2 kids that destroyed.
Oh, okay.
So basically, there's 2 people always picking up after 2 kids. Now we only have 1 person picking up after 2 kids, and we don't have when we're at our cottage, we don't have a regular cleaning lady coming in. We need to find one up here, so it makes it difficult. When you got the 1-year-old and 3-year-old, you guys know, the listeners out there that have went through this. This is just, they destroy a house basically in 5 minutes.
All right.
That's how it works. Remember that, Joel? You remember those days?
Oh my God.
Kids just tearing up the house, destroyed.
Boy, that was a long time ago. But yes.
Spencer, those days are coming for you yet. That's what you have to look forward to.
Yeah, Ariel's listening there. Very nice. Very nice. Girlfriend.
Okay, moving on.
moving on.
I'm buying the Spencer 219 wedding calls. All right.
Alrighty.
Luke is on the radar too here, so we'll see.
Spencer's trying to get out of this tangent somehow.
All right. Adobe. Did you guys hear?
Adobe. Did you hear Adobe? Did you hear Adobe? Buybacks? Adobe?
Yeah, Adobe. $8 billion buyback plan. They're also acquiring Magento Commerce for $1.68 billion. So that was Adobe's headline, and then that triggered some movement also in Shopify because they were seen as potentially being in play there. So clearly not anymore.
So Adobe not buying Shopify. That's apparent. That's why SHOP started getting hit on this news train. Down about $4, just over a couple % there on SHOP. Adobe with the buyback is trading higher. Not significantly higher, but up 1.5%. We know buybacks, the action and towards the buybacks has been somewhat muted, aside from Micron, which we're going to talk about in a second. But really, we've seen some multiple buybacks, some big ones out there, and they haven't had the response that they have in the past, where we saw stocks pop and then actually give a lot of it back. Now they're doing an acquisition here, so some other stuff too. But Adobe only up $3.5. It's a big buyback though, $8 billion. Wow.
Yeah, and it really high. I mean, considering it's at all-time highs, a lot of times Not saying that they're going in buying thing at the market right now, but usually, when you see a downturn or a stock, in the gutter, you see these buybacks, but not the case, as Adobe is making going to try and make a new all-time high today. Your after hours of pre-market trading is the same high, right around 241.60. Yesterday's high, 240.78. If you're looking for a gap fill, we're pretty close to that. And the number on the upside is 243.34. That's its all-time high that was made on May 14th.
Let's move to Micron, MU. Spencer, big buyback here too.
Yeah, what is it with the buybacks? Micron buyback.
People, companies are making money.
That's true, I guess. All right, Micron after the bell yesterday announced a $10 billion buyback plan.
Wowzers. And deal with Intel too, so that helped as well. But this is mostly the buyback because that Intel deal came out and the stock really didn't move much. It was maybe up trading a little bit, and then like a minute or two later, said the $10 billion buyback, and kaboom, the stock blasts off in orbit, continuing to blast off in orbit, building on yesterday's gain. It's up 4% yesterday. It's up another 6% here today. This thing's almost back at 60. I'm kicking myself. A week and a half ago, it was around $45. I was like, because it just hung out there. Really, these things, when they blast off, and they don't seem to give you that second chance. But Micron did. I should have bought more. I did not. Regretting that now as the stock is back up here near 60.
All right. Oh, 58.93. That is your last print. 58.95, the high. $60. I don't know. Maybe we'll see some size there at $60. The last time we traded up to 60 was on March 22nd. You had a 60.30 high. Haven't closed over 60 since since March 21st is 61.07. So keeping an eye on 60, 60.30 if the rally can continue.
I mean, what's hot stays hot, it seems like, in this market. Yayo talking WWE. I just want to go to this for a second because I was just talking with one of my buddies up right trading about this. You look at WWE and you look at the Weight Watchers, and Weight Watchers a little cool as of late. But I mean, it seems like when these stocks start going, what stays hot just stays hot. And what is going on with WWE, Yayo? I have no idea. This thing just continues to blast off. Maybe Jason Shubnall knows because we know he's a huge wrestling fan there at Benzinga on the news desk. But I tell you, this thing hung out between 10 and $20 for the better part of, a decade.
Well, they had news
and
yesterday.
Now all of a sudden we go from 20 to 60 in a matter of less than a year.
Well, they had news. It wasn't like they didn't have news. They signed reportedly at least, a $1 billion deal over 5 years for SmackDown, which is one of their properties with Fox. So Fox will broadcast WWE SmackDown, and they're going to pay WWE $1 billion to do so.
I mean, I don't know what's going on here, but
I mean, that's
okay. So $1 billion,
a lot of money.
Okay, great. Maybe that's a huge contract. That's all good and everything. But is this stock really worth? We were in October. We're $21. So here we are now. It's worth 58. I mean, this market, in certain pockets, is crazy. Like Weight Watchers too. Like, let's just go to this one for a second here too. Is this not like the old stodgy? Like, what do they do to reinvent themselves besides hiring Oprah? I mean, in 2017, the stock's $11. We're just over a year later, and we're now 79. What's going on? Is this just new? Like, this was something that everybody had for dead until Oprah got involved. And I'll tell you, never bet against Oprah. When Oprah gets involved, next time Oprah gets involved in a public company, I'm buying it that day. Because this is just, incredible here now. Now we're at 80. We're back to where we were in 2011, 2012 on Weight Watchers. These are two stocks that had been dead money for a lot of years and just decided in 2017 to start rallying. In 2018, that rally has continued. And they are just incredible movers. I mean, Yayo was asking if I'm shorting it. Wow, I'm not shorting. I mean, the thing's a rocket ship. I don't even know where you think it'd be 70 no more. It's crazy. But I'll tell you, eventually these things usually do. I'm definitely not buying it up here. I think eventually I think it's a bubble and eventually they burst. But maybe there's some other things we're not thinking about. I don't know. Like the esports thing is taking the markets by storm. Maybe, if there's any wrestling esports stuff, maybe they got some licensing rights there. I'm trying to reach here, but I mean, if it's just, the regular wrestling that I always watched on TV and there's not that much else to it, I don't understand what's going on here.
And, volume's coming into the stock. You had that. I mean, it's all just been in the last. I mean, it did double up to 43 and change, but you had the leap from 43.59 to 50.31. That was on 10 million, and then one quiet day, and then you tacked on another 6 bones yesterday. 59.45. That was your high from yesterday. Haven't quite reached it in the pre-market or after hours trading, but man, it's in a rocket ship mode.
Rocket ship mode.
You just gotta. I mean, with these kind of things, like if you really need to short it, at least wait for some kind of consolidation, and then maybe a double or triple top for something to lean on. Or the other strategy would be, wait for the consolidation. You get 2 or 3 lows, and then boom, if you take those out. I'm not sure what the short interest in this is, but if you want to pick on a stock, and Dennis, I don't mean to pick on you on this one, maybe Celgene. I mean, look at that.
Horrible stock. Just epic disaster for me on Celgene, because here's a stock that I was averaged in at $29 I bought years ago. It's up at 140. It's up like 500% on this thing. It's given back now half of that gain. And I bought more at 90, so I brought up my average. It's like I could turn this 500% winner in my invest portfolio into a loser. I had no idea that Celgene could fall back to $74 when they make as much money as they do. So this market, what is loved is loved. What is hated is hated. And that seems to continue what it seems like forever. I mean, fundamental analysis, if you're sitting back and crunching numbers and looking, at balance sheets and looking at cash flow statements, and you're trying to come up with targets based on that, I tell you, man, that stuff is meaningless here right now. Eventually, maybe it means something again, but this market is just all about momentum. And what is loved is loved. What is hated is hated. The ball's going in one direction. It just continues to go. Celgene will trade with a forward multiple, probably 6. I don't know what WWE and Weight Watchers multiples are, but I can tell you, Tesla, here's another one, the honey badger stock that it is. I mean, that Consumer Reports thing that came out yesterday, the Tesla, the 3, maybe there's more to this, but, the thing can't break faster than an F-150 and they give it a pass. Like the market just buys the stock on that anyways. I mean, there are some issues here, fundamental issues that they got to figure some stuff out, but market doesn't seem to care. I mean, yeah, it's off the highs. Yeah, it's at 284, but yeah, it's still trading with a multiple, or it's trading with a valuation, I think, higher than Ford and GM still. So I don't get the market from a fundamental basis. I honestly think like logic is almost out the window in a lot of these, in a lot of these cases where it's just trade the momentum, trade what you see, trade the momentum. But if you stop and try to think logically about some of this stuff, man, sometimes it's just very difficult. If you're just trading just based on logic, probably really hard to make money right now.
Can I go on a quick tangent for a second?
Yeah, let's do it.
So this is going back to WWE, but I wouldn't be surprised if this is the signal that we've reached peak content, right? Peak media bubble, 2018. So for years the saying goes, content is king, right? If you have good content, you're the king. Netflix has good content. That's why they're the king. Apple is making good content. Amazon, they're all investing heavily in content because content is king. That's how it's gone for the past decade or so, pretty much. Now you have Fox paying what was the number again? $5 billion, or no, sorry, $1 billion over 5 years. $1 billion over 5 years for a product that aired on the USA Network for the last decade. And I was just talking with Jason Chubnell, our editor, our resident, or the only wrestling fan here at Benzinga, I would say. He noted that SmackDown, which is at its lowest, they're at their lowest ratings in like 15 years. So you have Fox selling out $1 billion over a product that was more popular 15 years ago than it is today. Why? Why are you doing this?
Like, I get your argument here, so I get this, content is king, but what about the CBSs of the world? There's a good article in Barron's that's saying, CBS has some fabulous content, yet it trades with a multiple of like 7 going forward.
Yeah.
And it can't catch a bid. I mean, a lot of your traditional media companies haven't done well with their content, and I mean, who's got more content than CBS? I mean, they produce a lot of stuff. And not only that, like it's a full-on network, and they're trading with a multiple. So it's like it's still a stock pickers environment, even in the content. Like even you can't just say they've all rallied there. The CBS has been in the gutter forever. I mean, maybe it comes out of it here, and maybe but I look at WWE trading with a market cap of $4 billion, and then CBS, which is your entire network, is worth $19 billion. So you got one show basically versus entire network. And it's a big difference, 19 billion to 4 billion, but there's also a big difference in the money they make here too. I mean, WWE made 58 cents last year. It's trading, at $58. So if I'm doing that math right, if those numbers are correct, I mean, let me just go verify that. It's trading with a multiple of 100. Yeah, 99. The P is 99. And the P is 9 for CBS. Like, I don't get it. I can't sit here and try to just crunch numbers and come up with targets and stuff. And I guess that's just maybe not the way the stock market operates anymore.
I don't know.
All it cares about is if you're hot, you're hot. And you're not, you're not.
It would be great. It would be great if we can compare viewership of Netflix, to CBS and the networks to the Netflixes and Amazons, but we can't because Netflix doesn't release their viewership data, so we have no idea how many people are watching shows on Netflix. We have no clue. That would be great if we can know that. That's why getting the Amazon Prime number was whenever we got that a few months ago was so interesting, because we don't get numbers like that for these technology platforms. It would be great if we did, but we have no idea how many people are watching a show on Netflix. They just don't tell us. CBS has a lot of shows that a lot of people watch. I don't know if they're critically acclaimed shows or not, but you're right. They have a lot of shows. To me, paying $1 billion for essentially one wrestling property. I mean, it's wrestling, right? And we're paying $1 billion for this in 2018.
It's not even real. Sorry,
Jason. That's not the point. That's not.
It's a complete show.
That's not the point.
Even real.
It's a show. Whatever. A show is a show. Real, fake. Who cares? But $1 billion for, wrestling, wasn't that more popular in the 80s?
I loved wrestling in the 80s. I'll tell you, I loved wrestling. I woke up every Saturday morning, 11 o'clock. I'd stay up till 11:30 at night when I was like 12 years old to watch that main event that would come on. Hulk Hogan would be on. I loved it. I totally got out of it. Maybe I just grew out of it, or maybe it just wasn't as good. I thought it wasn't as good. But anyways, it's always got its following, and props to, the people who have been a believer in this stock, because, the stock $10, a year ago, a year and a half ago, now 58. So some people have done really well, but you sit here and crunch numbers and try to really say, from a fundamental basis that WWE is worth $58. I don't know how you're coming up with that, but it's, again, this market, just keep it simple, I guess. You're in an uptrend, you buy when the stocks pull back, and because those uptrends continue. And, that happened here in WWE. We got up to $40 and pulled back to 36. But even the pullbacks on this thing since October, they're pretty minimal. We've pretty much been straight up since October.
And on top of that, you have the Hollywood Reporter who broke this news reporting that someone else actually outbid Fox. They bid more than $1 billion, but WWE chose Fox for other reasons. So you have two people essentially bidding over $1 billion for one wrestling property, and they're gonna air it not on their sports network, on the Fox network, the main network that everybody who has cable gets. Which is crazy to me. Are we that hungry for content? Are we really that hungry?
Maybe you're right. Maybe that's why the big networks don't trade with multiple, because they overpay for all this stuff.
Are we really that hungry that we're going to pay $1 billion for one show? I
have an idea. How about you and I start wrestling on the show, and then maybe we'll improve our content? I don't know. Dennis, you're too big. You're what, 6'2", 220? I'm not going to wrestle you.
Okay, slow though, Joel.
So I just asked Shubs. This is 2 hours once a week, this show. So we're paying $1 billion over 5 years for 2 hours of weekly programming. That's crazy. Is that what it? That just blows me away. I'm sorry, but that was my little.
I still like my AMCX from content perspective. That thing only trades.
This is not sustainable. This is not sustainable. This is not.
This hunger for content.
It's not. No, this is not sustainable. It can't go on like this forever. It just can't.
Tell you, I'd rather own an AMCX that actually makes decent money. And if we look at the market cap of AMCX, comparing it to WWE, so AMCX trades with a multiple of 7 only. They are producing content. They only trade with $3.29 billion, so they're worth less than WWE. They produce a lot more than 2 hours of content a week. I mean, they produce a whole, for their own network, obviously, too, but they produce a lot of shows. I still like AMCX. I still think AMCX is taken over eventually. So that's why I'm sticking with it in my invest portfolio. It was up on its own fundamentals. So not only, do I like it because of that, I like it because it's got good fundamentals, too. So and then you got the wild card that if this hunger for content continues, hey, here's AMCX that actually sells a lot of content, probably to Netflix. I see their shows on Netflix all the time, assuming they get paid for that. I think there's going to be a scoop up there of AMCX one day. Sticking with that.
Chubbs is adding their rumors that they might turn SmackDown into a 3-hour show to anchor Friday night programming since there's
an extra hour.
Yeah, since there's less competition on Friday.
Regardless, these premiums for IP and for content properties are just going through the roof, and in my view, not sustainable. I mean,
I think I agree. Maybe I can't see even these stock prices on some of these things. Just when you look at this WWE, it's a huge move. But you know what? What's hot is hot. Am I coming in here and shorting it? Nope. Because I've seen what stays hot, what stays cold. And, I'm starting to learn that the hard way too. I mean, my trading's been fine, but my invest portfolio, I'm a big value guy. These value stocks continue to be out of favor. Celgene, going right back to what you were just saying, Joel, destroyed yesterday. Again, maybe it was something to do with that report that came out from, I can't remember what it was, but, they were talking about, 6 or 7 companies that were basically, trying to stifle competition, a little bit of antitrust.
Yep.
And you know what I mean from yesterday from that report? What was that, Spencer? Help me out here. It was Pfizer, Celgene, GlaxoSmithKline, basically all the stocks I own. They didn't like, that they stifling competition.
All right. Anyway, move on.
You guys are on a rant.
Yeah.
There.
Well,
and you know what? I watch no TV except for Michigan sports. So
that's your problem.
Yeah. I mean, I don't know what all this content, WWE. I mean, I stopped watching that when they got rid of Dick the Bruiser. So,
I mean, remember back in February, Netflix signed a showrunner, Ryan Murphy, for a deal that could be worth as much as $300 million. Is one person really worth one showrunner who's produced a couple of good shows? Is he really worth $300 million? I mean, come on. This is ridiculous. Anyway, I'm done. Moving on. Other things.
Let's go to the earnings parade. Let's grab Kohl's. Kohl's popping big time on their report here. It's up $3.50. Give us the numbers here, Spencer. It was up into the report. They must have really blew it away.
Q1 EPS 64 cents versus a 50-cent estimate. Sales $4.208 billion versus a $3.95 billion estimate. So again, beats on top and bottom for Kohl's. They also narrowed their fiscal year 18 EPS guidance. They narrowed it by just about by about 10 cents, but it's still in line. $5.05 to $5.50 is the fiscal year EPS guidance, right in line with the $5.27 estimate.
It keeps popping. I mean, now I feel like it's overdone. It was cheap when it got down to $38-40. And remember, I said I didn't want to own any retailers, but if I owned any of them, it would be Kohl's. I wish I would have bought it. I still don't own any retailers because I'm still concerned, that obviously there's a lot of them that aren't performing well, but Kohl's was right back, and we're not talking anymore about, lows. We're talking, it isn't, we're ways off the all-time high. We got back up in 2015 to $79, but we are within, 10 points here now. And, that would have been, it seemed like impossible back in October when this thing was 36. So that dividend that was 6.5% is now only 3.5% because the stock has went up so much. $70 maybe, Joel. What are your thoughts here?
I mean, I see. I mean, you did pop to 69.60 in the just in the last bracket, and there's some volume being traded with that too. So I will keep an eye on that area. Just be aware, 69.48. That was your February 27th high. I believe you had a bunch of price target raises then. So that's 69.5 to 70. I would look at that as a resistance area. Besides that, I mean, you need to go way back until 2015 when you had a $75 high. But I think you got some work to do at 69.5 and 70 in Kohl's today.
I'm going to look at the book just to see if there's anything in the book standing out. $70, not that much. Okay, 10,000, 69.95, another 16,070. It's early. That can hold down a bit, but 70 is going to be big. I mean, that's a level it's going to test here. But again, what's hot is hot, what's not is not, and Kohl's is hot once again. Macy's also getting a lift here in sympathy, but Macy's also has some analyst action as well. Susquehanna upgrading the stock to positive, raising the price target to $43. That's chasing price all the way. But anyways, can't argue with the chart. It's breaking out here. So if you were following Macy's lead from last week and you bought Kohl's, you're pretty happy this morning.
Yeah, definitely nice move. Can we talk Baidu for a second here? Despite things being okay with like the Chinese tariffs and everything, this stock has gotten walloped the last couple of days.
Yeah,
and it had a gap fill yesterday. We were talking about this earlier in the chat. I thought 39.40. It did 39.40 and then some. It went to 237.83, trading up 259 in the pre-market. So getting back some of those gains. I'd like to see one or two or three lows, just like besides his 37.83. Maybe some people feel like they missed the boat here at 240. Bids will come up, but may have a tradable bottom here in Baidu. You hit 284.22, the all-time high last Wednesday. $50 shaved off that. So see if you could get a little consolidation here.
I mean, they lost their COO.
There's got to be something
and it's
going
been
on
straight
here.
down since. Like, I don't know if this guy was the machine there or something, if he was worth that much, but that's, was the catalyst that started the sell-off,
There's
and
got
it's
to be
just
something.
continued.
So yeah, the COO leaving, that was Friday, and then yesterday we had news that they were divesting their global ad and tools business. And there's got to be something else going. There's got to be something here. I don't know. It's just the headlines like that, back-to-back days, that they're selling a major part of their business and the COO is leaving. I mean,
it's the same thing though. What's hot is hot, and once you start cooling and once you get a big red candle, it stays cold for a bit. Now, this is still longer term, still in a pretty good uptrend here. And I will say, if this thing gets anywhere near 220, it's where you found support multiple times, 210 to 220, so call it February, April. But we've come down that far, that fast. It's not out of the realm to think that this could be another 20 points lower in the next few days. So just be careful, because it's been very difficult to call bottoms. That's always a difficult game. And this is where traders get themselves into so much trouble, including myself. You see a stock going down, it's just like too cheap, and you try to call the bottom, you're trying to get the absolute bottom. And I mean, that's always been a difficult thing to do. The big money's made in the middle part. It's where the meat of the move is. When the stock starts going up, then, you get on board and it's the easier ride. That's why, Joe was just saying, when you're shorting a stock, wait for it to at least stop going up. Let's have a red candle. Let's have some reason. Same thing when you're buying a stock. Wait for it to stop going down. Let's see a green candle here on Baidu before pulling the trigger. I know people are buying. It's up $3 here this morning. But you know how many people are underwater in this from the last couple of days? A whole pile. So now you have an overhead supply issue. If everybody who's bought this thing basically in the last month is getting killed in the last 2 days, they're looking to, try to get some of those losses back. So this thing goes up $3-4, it finds more sellers. And that's why it's very difficult to buck those recent trends. So I think you got an overhead supply here issue all of a sudden. And believe it or not, the path of least resistance for BIDU is probably lower.
And also, what I like to point out, you talk about, the people that brought on the recent rally. I mean, you also have, a lot of investors, long-term investors that are in this thing at much lower prices. And, 240, 242 may seem low to you after hitting 280. But if you pick this up during the August flash crash, in 2015, it traded down to $100. You had a lot of people accumulating in the 170 to 180 area. So, I mean, there are people have to look at. There's still people sitting on profits. If you bought this thing in during the financial crisis, you got it at $10, $11. So that's another perspective you have to keep. When you're buying these stocks, is that, there are people in at much lower prices that, it's off the high, but hey, they're going to rig the register. It's like, okay, I'm done. If this gets below 230, I'm done. And then it just is kind of self-propelling. So, just keep in mind that when you're trying to pick a bottom in these stocks.
Let's jump over to another earnings stock here. And this morning we had a few actually reporting here this morning. TJX. Did we get those numbers here yet? Or
I
they
think they're
8:30?
I think they're at 8:30, which it is.
Usually 8:30. It's 8:30 right now, so it
Yeah.
should be almost
Live at
across.
TJX.
Well, I'm trying to get the news on.
I don't see any. Yeah, I don't see a lot of trading actually.
I think it
They'll be.
just. Let's see.
I hit the tape. All right, let's go Toll Brothers and come back to TJX.
Okay.
Toll Brothers getting rocked.
Good idea.
I got an odd lot in there, and it's it's how much can you lose on 50 shares? So apparently $100.
Well, that one's out.
I only had 50 shares. I was like, I don't care, 50 shares. But anyway, it's down 5%. TOL.
72 cents versus a 76-cent estimate. Sales 1.599 versus 1.58 billion dollars. So a slight beat on the sales and a miss on the EPS.
And you know what? All those other home builders blew it away on their numbers. So now that Toll misses, I mean, those other home builders like Lennar, it was up $4 or $5 on their report, gave it all back almost instantly. So those stocks couldn't go up on good reports. Well, Toll's got a bad report. So I don't know, maybe it's going to be one of those situations where it doesn't go down that much. But I just think like the other ones couldn't go up on good reports, and this is a bad report. So it's probably not good for the stock. Like I said, I got stuck with 50 shares overnight. $100, it doesn't really matter, but 100, it's still like 50 shares down $2. It's like, man, I'm down 5% on that 50 shares. But anyways,
it's all about 40-70 area here, Dennis. You've had multiple lows since April, more in May. The most recently at 40-70, 40-73. Also, the actual low of the move was made in April 25th at 40.63. So someone's been hungry for this thing under $41. I think the longer it takes to get back to that area, you might see people, trying to buy on the rebound. But I'd be patient if I had this thing short or really had to try long in it. I would wait for the 40.70 area. Maybe not today or perhaps tomorrow.
Okay, imbalances. The one standing out here today and getting a nice lift here is General Electric. Yeah. It is up 1.3%, 520,000 shares to buy. That's significant as well. You want to know the catalyst on this one? I tell you, the fast money guys move stocks. Carter Worth is, when he's on fast money, he's wide. He's fairly well followed there, and they buy the stock. And he came out bullish on the stock on fast money last night, and said he thinks it could go to 1750. And that stock started popping. I was like, he can't move GE, can he? The thick stock? I don't know. 100,000, 200,000 shares trade and takes it all the way up. It's already traded 262,000 shares this morning. So for this rally, you can thank Carter Worth off fast money last night. That is your catalyst. People immediately try to find another fundamental reason, but I'll tell you that was it, because I watched the stock go as soon as he started talking. It was trading 15.25 and 15.45. And anybody worrying about the dividend after that Fox report around 3:30, we had Gasparino coming out with the report saying that GE might potentially slash his dividend to nothing. GE got hit on that news immediately when that broke. You can see actually, if you look at the candle, it was like 15.35 and boom down to 15.20. Well, that's all forgotten now because Carter Worth likes the chart.
Okay, I would look at yesterday's high of 15.55. Haven't hit that level yet. Currently trading at 15.46. So GE a lot of times will make a couple highs in the same area, do a little bit of consolidation here. So working on its second month here of a green candle, but 15.55 is my number today here in General Electric. Great volume yesterday, 78 million shares traded.
Spinner's arguing with me. He says not Carter Worth. I know it seems unbelievable, Spinner, but I promise you that this happened off Carter Worth because I watched the trading action. It was literally not even moving. It hinted that Carter Worth was going to be bullish fast money at 15.25, and they started buying like crazy. It's just like all of a sudden trading like every second off of that. That is like showing you what a retail driven market we are in right now. And it just continued to buy. And then he got on and did the segment, and they continued to buy like crazy. Like it was trading like every second. And you can just see the retail traders like just coming in there, buy G. He just said 1750, buy. And it used to be like a slam dunk that when these things pop like that, you just sell it short and it comes right back in. It's not anymore. It's like they get follow through too, which is crazy. So I know it sounds unbelievable when I say that Carter Worth just drove GE up 1.38%, but he did. I watched the trading action. I was right there trading. I actually bought with it. I bought, the 15.25 we said too, because I anticipated that he's probably going to move the stock. I sold at 15.31, thinking 6 cents was a pretty good move for somebody getting a mention on CNBC. It's continued, 15.47. So, maybe there's always news on GE. You can find other reasons if you want. That catalyst was Carter Worth.
Are we forgetting about Nick?
No, I was going to grab Nick, but before I grab Nick, I want to do the TJX numbers real fast. The Q1 EPS, 96 cents. That missed by 6 cents. So the estimate, $1.02. So TJX is out, and they are hitting it.
Well, it went down. You just had a quick pop, 78.70, back up in the 82 handle, now down only 2 sticks. Boom. I don't know, man. It's a quick bounce off the lows. I don't know if you're going to get a second chance at it. Let's see. In order to get back to the lower end of yesterday's range for a gap fill, I'm looking at 84 as potential resistance. Do we have Nick Chahine here?
He's right here.
Nick, how you doing?
Doing great. How about you?
We're doing okay. I don't know. Dennis and Spencer have been on some rants today on media stocks, different things. But this is just first start with your overall thoughts on the broad market.
Well, I've said even since like the middle of February that the bear thesis is thin without headlines that are scary, and new headlines, I should say. And this is the result of it. We haven't now the biggest boogie headline, I guess, boogeyman headline is somewhat gone, the tariff war. And we had some hints about it, and you and I have talked about it, and I told you what I thought about it. So here we are with no headlines looming. The upside meander continues, and technicals are favorable to the bulls. I see cup and handle-ish pattern in everything. So I wouldn't short this market. I would trim profits as it's going, but I would definitely still be biased long.
Okay. All right. Let's pull up some of Nick's charts here. We'll throw a tough one at you here. And one that just reported, TJX Companies here. Long time, great performer. Just got hit on its report, but you blink an eye and this thing's right back up. Any technical or fundamental thoughts on TJX?
I didn't read the report. I know they're like flattish now, maybe down 30.30 or something like that. But maybe it's a little bit from Kohl's, I think, also reported, which beat and raised guidance. Correct. I don't know what TJX did. So the stock is not that low. It's at a contentious spot. Let me see if I can plop in a chart here. So the zone around 84-ish, 85 is a pivot, a recent pivot, but it's near a high. So I wouldn't completely, discount the fact that it could hold, but I wouldn't completely bet on it either. So it's depends on what happens in the retail sector in general. I think this is where this one will go. I don't know the fundamentals real well.
All right, let's I think you were eyeing this one yesterday. Big decline in Baidu here over the last couple days with the changes in the C-suite. Are you doing any sniper trading in this one?
Yeah. Yes, I was long in Baidu going into it, and I was long after the first red candle because I thought to myself that the CEO leaving was not reason enough to be down this much, but I think there was a secondary headline as well. Regardless, it doesn't change the fact that it's a good stock to trade, not invest completely. So I had a back spread of sorts in there, and I added to it yesterday. So if it pops a little bit, I would be back to even. This is where using options is good because you're limited risk. As opposed to spending $280 per share, you spend a fraction of that. And if it goes wrong against you, you can close it for partial loss. So I'm not leaving it just because of the whole market. I don't think this one continues to fall on its own if the market. Maybe I'm missing something because the volume is really high. So.
Yeah, it was. I mean, it's just momentum, sell stops, more sellers. I mean, it's, this market we were talking earlier, kids going in one direction and it's hard to stop it.
But this is the highest volume I see going back almost 2 years of, maybe 2016 in June. And unless I'm missing a piece of the puzzle, I think it should be fine. There was a gap that it closed on this dip yesterday, so we shall see.
Jazz wants to know what call spread you have
on. You know what? I can't remember now. I'd have to pull it up. Okay, give me a second. I will while we're talking. So
okay, all right. We get JC Penney falling 8% in the pre-market as the CEO leaves for Lowe's. Dennis, you were talking about this one yesterday. More pain here for J.C. Penney, down 20 cents here. I'm not even going to ask Nick about that one. But there's a new one in the chat here coming from Matt in Beyond. Yep, that is Matt in Beyond. PSTG, Nick, Pure Storage. And this one is trading at, I believe, all-time highs here, down $1.68. Do you have an area of interest in this one from a technical perspective, or you just don't follow it?
I don't follow it, but when they get to be this high, you'd have to know the internals to decide whether this wedge is going to break or not. So it's one of those TH, maybe too high to chase and too hot to short. So I can't give you much more than you already know about it, maybe. But here's a chart for whatever it's worth. As far as Baidu, it was 275, 277.5. So it wasn't a lot of money, but it was just a trade that I was hoping to capitalize on. Maybe I will. We shall see.
Okay. All right. Moving on here, Nick, the oil market. I think that this is something that is, helping out, some of the sectors, obviously the XLE and some of your oil companies. Overall can have some negative implications, for, the consumer, higher gas prices, higher oil prices, could hurt consumerism. But any thoughts here? Is this oil rally ever going to end?
Yeah, I do have thoughts. Yesterday, I sent out in my write-up, I made a note that intraday, I noticed that there were some downticks in the markets on spikes in oil. So eventually, the stocks will suffer from oil. This is a crude chart I'm going to post. So it's pretty high, but if you expand it to a weekly, it's still not nearly as high as it was before. So fundamentally, I just don't think that demand was that much improved on oil. Maybe I don't know enough about it. I know they speak of transportation and storage as the problem. So it's not that there's so much they have a glut of oil, but the problem is that they can't store it. So it offsets the glut situation of source. So definitely above my pay grade with regards to all the intricacies. But if we had oil at 55, 60 for a long time based on fundamentals and supply and demand, suddenly now it's worth 80. Did the demand grow that much in this period of time? No, we were either wrong completely at 55 or 60. But then when we were there, they were saying we were wrong at 80. So who to believe?
All right. Scott C in the chat wants your thoughts on SWCH. Busted IPO, or has it found a bottom?
I don't know the company, Switch, and since it doesn't have a bottom, I wouldn't guess that this is a bottom. Keep your fingers, man. I don't know. I don't know anything about it. And the chart, since it's in a lower low, I just can't give you anything other than, hey, if you own it, Hopium is the only thing you got here.
Okay. It is a company based in Las Vegas that develops and operates the SuperNAP data center facilities and provides co-location, telecommunications, and cloud services and content. SuperNAP. That's not a great name for a data center, is it?
Tough. I mean, my gosh, how many companies do that? And don't the big guys do that also? And this is a tough arena. So I really don't know the intricacies of it. Maybe they do, the listener, viewer. So it's up to them. Technically, there's nothing I can tell them.
Okay. Let's just get your thoughts on GE here. Just moving up with some good news here.
Speaking of tough, yeah. Yeah, it's one of those things where you had to plug your nose and say, okay, this is it. I'm going long, but I've done this before. So it all depends on just consensus and sentiment. It got so bad, and the news probably couldn't have gotten any worse. I gave up on it, so I don't track it anymore. But there is technical upside potential. So it all depends on how the rhetoric go with regards to GE and what they're doing. It could get back to the big crime scene. So first level I would look at is 1590-ish.
Okay.
And then the second level is 1730-ish, which is, these are two ledges from which it fell recently above current price.
Okay. Any thoughts on Procter & Gamble here, PG?
I thought they were all out of favor. So, and the news got so bad. I mean, this is a old company, and I just don't think they're just going to go dwindle and die. It priced their earnings as 18, so not screaming completely cheap if you consider it compared to Apple, which is probably right around there, maybe 20. These is trailing 12 months. But I think if dividend payers, and I think this one pays dividends, so they're challenged as rates rise because that's an alternative to them. I can put my money in somewhere safe that gives me interest, or I can risk it in the market and get the dividends from these guys. But long term, this should be fine. Let's put it this way: I would sell puts in a company like that. And there's a gap above, which brings it to the ledge from which it completely fell apart on the last earnings report. So 75, 80 or something like that. Maybe the creep up level, and then what it does with that gap from there, I don't know.
It did clear 74, had multiple highs there. So if you're looking for a support point, old resistance, new support. Enjoying the benefits of the oil rally here. ExxonMobil now well over $82 at $82.30. Just working its way back here. Do you see any major resistance here in ExxonMobil, or an area of interest if you like to buy it on a pullback?
ExxonMobil was better lower, but it is in a technical breakout to erase those ugly candles, which I didn't think were warranted. But anyway, they happened. So if I'm long it, I can probably stay long it. As far as Exxon is considered, but I would trim a little bit just in case, because now oil being this high is probably a liability more so than an asset, because if oil has a correction, these guys fall with it to a degree. They're good companies. When they fell down, I sold puts and put spreads in them. I don't remember exactly when or what, but I know I did it. So, but now up here, I just don't watch it. I throw it into the future for the next headline.
The stock that's gotten off the mat, Valiant Pharmaceuticals here. In the 20
VRX
handle here. VRX traded up 12 cents at 22.19. Just a nice, slow, steady rise. Perhaps get rid of some of those debt issues. Still a long, long way from that all-time high. A lot of room to make up here. Any thoughts on VRX?
THTH, it's too high for me to chase it here.
Right.
I did sell puts on it several times when it was much, much lower and on bad headlines. And it was a bet
right.
on whether it's going to survive or not. But there was enough good about it to where I was like, okay, I can own it at 8 or at 10 or 12. But up here, if I have profits, I'd probably book them and leave maybe some house money bets for more upside. But clearly the easy work has been done. I mean, you look at the chart and, hey, it could go higher, but I'm not willing to bet on it from here.
All right, here's a move to me that makes absolutely no sense. The JCPenney CEO is leaving for Lowe's. Marvin Ellison here. Hitting the JCPenney, they're bidding up the Lowe's here. Really, it's breaking out here. No major resistance. I'm looking at 90 at high at 89 even and March 27th, and then 90.33. But man, was this guy doing such a great job at JCPenney here and bringing them over Lowe's? Any thoughts on either of those issues?
I can tell you that Lowe's reports tonight, right?
Yep.
So there's a.
I think it's tomorrow, Nick.
Tomorrow?
Yeah.
Okay.
Tomorrow morning.
Okay. So before they open tomorrow.
Yeah.
So it is a binary event for the next few days, but technically it's looking frisky at this level. So it could see 90 in a blink, and there's a huge open gap above. But I do have to say one thing about Lowe's. I have Lowe's and Home Depot around my house. Lowe's is a little bit closer, and it used to be my default go-to just because A, it's closer, and B, it had better customer service because it was less busy. So that was bad for it business-wise, less busy, whereas the Home Depot was always buzzing. It can never get help. Well, guess what? Recently, it's been the opposite. I go to Lowe's, it's less busy, and I get crap service. And I go to Home Depot, it's more busy, and I get awesome service. So I don't know what happened there, but I think operationally, Home Depot is head and shoulders above Lowe's at this point. But we'll see what happens with the stock tomorrow.
I agree with that, Nick. I actually go to Home Depot just for that reason there too. I don't know, maybe it's just coincidence there, but I find the service at Home Depot exceptional. And Lowe's, I have trouble sometimes finding somebody.
Yep.
So I don't know, maybe they just have less staff or what it is, and maybe this is just, me and you, and maybe it's just coincidence that, maybe we have good local stores, but I love Home Depot.
I don't know about love, but it was a good experience last couple of times I went, and it was obscure things I was looking for. So it is, I'm not as confident in the execution on the Lowe's team than on the Home Depot team, but technically the chart looks pretty frisky there.
I tell you, we're getting a lot of concurrence here about the Lowe's no help from Stock Hunter in Texas, Linda. So a lot of agreement here. We've been on the line with Nick Chahine. He's the author of Create Income with Option Spreads. Joins us every Tuesday to give us his fundamental and technical outlook on the markets. Nick, thanks for joining us. We'll talk to you again next week.
Looking forward to it.
All right, S&Ps have backed off just a bit. 27.39 is your pre-market high. 27.39 was last week's high, and 27.41 is a big level as well. So we got a lot of resistance up here. We're just hanging. We'll see if the market can punch through it here early in the session. Dennis, have we touched on any ratings yet today?
Well, I think we must have got TJX numbers here now, because we are popping here big time on TJX, and we said we come to them. So we're over 87 here now on TJX. Wow. Spencer, did we get those numbers?
Yeah, I read the EPS before Nick came on. That was a 6-cent miss. The Q1 sales number was beat 8.7 versus $8.47 billion. Comps were up 3%. They also raised the high end of the fiscal year EPS guidance, and their Q2 EPS guidance was light, but the fiscal year EPS guidance was raised slightly. So
we're now up over $87
How did they
here.
hit this thing down to $78?
Because the first number that came out was the EPS, and that missed.
Okay,
they're not crazy this market.
EPS.
That's a $9 rally, and
there's some crazy after hours moves on earnings, and that's why I've said it for years. Like, I trade events, I trade news. Big money is right there when you're trading these things, and the overshoots and the undershoots. I mean, there's big risk involved too, but sometimes, that's, the easiest money, and you come in intraday and you see crickets a lot of times because the things have already had the big moves. That's why a lot of opportunity there. If you're on these numbers, $78 is crazy.
Yeah, knocking on the door of an all-time high. You hit an all-time high last Wednesday at 87.31. Currently trading 87.20. Your all-time closing high is 86.27. That's really the only numbers I could give you. The big one, though, 87.31. That's the all-time high, and it looks like we're going to be taking it out. We just took it out in the pre-market trading.
Also reporting earnings was AutoZone and Advanced Auto Parts, obviously two stocks in the same sector. AutoZone is trading up $26 on their report. Advanced Auto Parts trading up $5 as well. You got those numbers for those two companies? We'll do them together.
Well, we'll do AZO first. $13.42 was the Q3 EPS versus a $13.01 estimate, so a nice 41-cent beat there. Sales $2.66 billion versus $2.72 billion, so a miss on the sales number. Mixed report in all for AutoZone. You wanted AAP, I'll do AAP with it. Q1 EPS $2.10 versus a $1.97 estimate. Sales $2.874 versus $2.91 billion. So same story there. Mixed report. Both those companies beat on the EPS and missed on the sales.
Both getting a lift here, Joel. Both have kind of been in the gutter, but slowly crawling back here as of late. Now they get some good reports to kickstart it. I mean, AZO is getting into a whole gap area here too, where it whooshed down back in February. Now it's whooshing back up through the same area. Thoughts here as we get this lift?
Yeah, just that high, just above 700. Well, on the charts, it looks like just above 700, but that high is way up at 710.59. And you're talking about a $7 gap up to 717.36. So I know 700 is a nice round number as well, but there's really no daily numbers there standing in its way. Advanced Auto Parts, AAP, that is trading up, breaking out on a longer term chart here. breaking out over 123.90, which was your yearly high. Where can this go? I'll just have to go to the monthlies on this one, and just not seeing anything in this stock. Maybe use that pre-market high right now for a potential target, and that's by a round number of 125, 124.98 is your pre-market high.
If you want to go back, look at ratings here quickly. There wasn't a ton. We mentioned Macy's. I do see RTN, which is Raytheon, catching a downgrade at Credit Suisse. That is trading down $3 in the pre-market. Spencer, was there anything else jumping out at you from ratings land that you want to mention?
No, those were the big ones. The other one that I thought was interesting was Deutsche Bank downgrading Manchester United. I guess they're not a fan of that team because downgrading them from buy to hold. Man U is the ticker on that, and
that's been hot, pretty hot lately. Probably taken off 19 to 21 in the last couple weeks.
MANU,
yeah, 21.10. I mean, a lot of daily highs here. If you're looking for a breakout, double matching top at 21.15, but this is a thin one here. 29,000 shares traded yesterday.
That's what happens when you don't win the FA Cup. I guess they lost in they lost to Chelsea, and there we go. I guess that's what happens. Got to win.
New in the Google chat, JVS Ranchers asking about SKY, and chart looks great. Big day yesterday. I'm not sure if it was attributed to earnings, but closed right near the high. 32.89 was the high. That's the all-time high. 32.47 close. Triple the average volume here, but not a heavily volume. I'd like to see this hold that close at 32.47 and just get right into the 33 handle for this move to continue. Dennis, any other stocks out there on your watch list, or should we go to the Google chat here? Larry Glickman is asking about KEM and what is this? Chemic Corp, potential double bottom here, trading up 20 cents. I'm not sure why you had such a big fall over the last three sessions, but finding support under $18.
Earnings on Thursday, but I don't know if they had estimates, so it's hard to say if those were. I guess they were bad since they were hitting the stock, but I can give you the numbers, but I don't have an estimate to compare them to, so I wouldn't.
It's just a lot of support under $18.
Back to imbalances, AT&T 170,000 to buy. That's getting a little bit of a lift, but stock finally, I would say, showing a little bit of life just the last couple of days. AT&T and Verizon. I think the Barron's article there, with the Cokes and the Pepsi and Procter Gamble, kind of kickstarted a few of these value names with the higher dividends there. So I think a little bit AT&T and Verizon probably kickstarted to help that whole area there too. But definitely doesn't help our food stocks because food stocks still are getting annihilated. I know Mondelez is getting hit. MDLZ. You want to talk about a short that looks like potential. What about Mondelez? Because you saw all these other ones get hit. Campbell's Soup or KHC starting to roll over here now. GIS and Kellogg's, those both look ugly here now again. MDL Zebra is coming up to this old 40 area and looks like it's failing there to me. What do you think on the short side, MDLZ? You like it?
Out. It looks
like get the hell out right now, doesn't it?
Yeah, it looks like an area of resistance. Several highs. Someone trying to wiggle out just under $40. Your last 5-6 highs between 39.5 and 40. Someone trying to sell on strength here. But if you take out yesterday's low, 39.24. You do have some intermediate points, but you got the bump off the low at consolidation, but just can't break through $40 here on the charts.
All right, that's going to be it for us today, folks. 8:59 on tomorrow's show. We are joined by Ryan Craver, probably our favorite retail analyst. He is the SVP at the Lamore Group, Senior Vice President there. He'll join us tomorrow at 8:35 to break down what is actually behind the numbers in TJ Maxx and Kohl's. And I'm sure he'll have thoughts on the CEO of JCPenney and how good or bad a job he did there and what that means for Lowe's. So that'll be on tomorrow's show. If you want to catch any part of today's show again, you can do so on our podcast on iTunes, SoundCloud, Stitcher, and TuneIn. Soon to be later this week, Spotify, Google Play, and iHeartRadio if you have any of those platforms as well. Thanks to our guest, Nick Chahine. Thanks to all of you who joined us in both of our chat rooms today, youtube.com/BenzingaTV and premarket.benzinga.com. Hope you all have a good rest of the day, and we will see you folks on Wednesday.